How do you earn a living? With a very few exceptions, all of us need to earn income to see to our needs. There are four basic forms of income: wages, profit, interest, and rent. Most of us will have the opportunity to earn a living with some or all of these forms. Each of these has advantages and drawbacks, and people will behave according to the incentives each form provides. Knowing the characteristics of each is important when you understand that people will generally make decisions that make sense according to how they earn a living. This is how people in the United States earned a living in 2008. Wages accounted for nearly 3/4 of all income. Profits came in at a distant second at less than a fifth. You can see that wages are the dominant source of income. Therefore, for most people, earning a living means slogging to work every day in return for a paycheck. Why is this so popular? The main advantage of a job is a steady, predictable source of income. A job is an agreement or a contract between an employee and an employer with three parts. First, what work is going to be done? Second, what schedule is the work going to be done on? And what rate of pay is going to be paid? This usually expressed as dollars per hour. Once you agree on this, you will have a good idea of what you'll be earning in the weeks, months, even years ahead. This allows you to take on ongoing spending obligations such as car payments, rent, mortgage payments, utility bills. In short, for most of us, a job is the key to freedom and independence, as long as you get to work. The main downside to earning a wage is that your income is limited. Your pay is limited by the wage you negotiate and your schedule. There are only so many hours you can work or that your boss needs you. Thus, extraordinary wealth seldom comes from a paycheck. Employers hire people and pay them wages to get things done in order to make a profit. Profit is the money left over after a company sells its goods and pays its expenses. In accounting lingo, it's revenues minus costs. For many companies, paying wages makes it easier to turn a profit. Enterprises like a restaurant, for example, need a dependable workforce that will show up when they're needed and do what needs to get done. The cooks need to be ready to cook when the customers want to eat. Paying wages makes costs predictable. Knowing what it will cost to cook a meal allows the owner to know what prices to put on the menu in order to make a profit. The main advantage profit has over wages is that it is virtually unlimited. Total profit equals the difference between the price of each item or meal and its cost times the number of meals sold. You can get very rich making just a little profit off each meal if you sell enough of them. Profit income is only limited by the profit margin and the number of units you sell. Offer something the whole world wants and you're in like Flint or Bill. Interest is earned by lending money. A loan has three components. The principal is the amount borrowed. The term is how long the borrower has to repay the principal. And the interest rate is the percentage of the principal charged over time. For example, if you took out a $200,000 30-year fixed-rate mortgage at 5% interest, you would owe $10,000 interest for the first year. If you didn't pay back some of the principal, you'd owe another $10,000 the second year. However, with a 30-year term, you'll need to pay more than just the interest each year. Thus, the principal will be paid back steadily, with the final bit paid off during year 30. The disadvantage of lending money for a living is that interest income is limited by the amount you can lend and the interest you can charge. The good thing about lending money, on the other hand, is predictability and security. Lenders generally aren't liable for how the money is spent, and they can require security or collateral in case things don't go well for the borrower. Rent is earned by lending things instead of money. People rent things like cars or houses to use them, but avoid the long-term obligations of owning them, such as maintenance and loan payments. Thus, the owners, or landlords, assume these obligations in hopes that they can find enough renters who are willing to pay more in the long run than the cost and upkeep of the thing itself. In addition to rent, owners can also profit from the sale of the asset, assuming it doesn't lose too much value. We all have the opportunity to earn income in different ways. Each of us has different tolerances for risk or the need for security that make different forms more attractive than others. For most of us, it's mainly a choice between wages and profits, between getting a job and owning a business, between being bossed around and doing the bossing, between working for the man or being the man.